Hello, and welcome to the Gestalt IT Rundown for February 3rd, 2021. My name is Tom Hollingsworth, and I am a member of the Gestalt IT Justice League. And joining me is one of my co-founding members, Mr. Stephen Foskett. Stephen, welcome to the Watchtower. How are you today?
I think you're mixing your comic books there, Dr. Strange, but I think I'm okay anyway.
All right. Well, we've got a bunch of big stories coming up, and we want to dive right into them because I don't know if you guys saw this or not yesterday, but we had some really big tech news. After the market close yesterday was another earnings call. Amateur astronaut and current Amazon CEO Jeff Bezos announced that he will be stepping down from that role effective Q3 of this year. He will maintain chairperson of the board role, and he does have some engagement in some of the special projects that are going on inside of Amazon, as well as a couple of those side hustles that he's developed, you know, trying to become a media baron and a giant philanthropist and potentially trying to kill Superman. Succeeding him, though, and this is the exciting part, is current AWS CEO Andy Jassy. Andy is a huge figure in the tech community. He is well beloved by everybody that knows him. He was long considered to be the dark horse in the CEO succession race because everyone pretty much figured that Jeff Wilke, who was currently the CEO of the consumer side of the business, was going to get the nod. However, last August, it was announced that Wilke would be stepping down this year, clearing the way for Jassy to step forward. Now, why would you want to put Andy Jassy in charge of Amazon? Well, it turns out, he pretty much has grown AWS to an unbelievable amount of success. You know, that little cloud computer organization that they put together on the side to support that little online bookstore that they built? It's now responsible for the majority of the profit of Amazon. The company posted their first $100 billion quarter ever. AWS posted a 28% revenue growth in Q4. Now get this, 52% of the operating income for Amazon as a whole comes from AWS. Stephen, what does this mean for the future of AWS and the future of Amazon as a whole? Because honestly, does this mean that we can finally agree that Amazon is a cloud company that ships things on the side with Andy Jassy being at the helm? And quite honestly, you know, Andy's the exciting story, but I kind of wonder what Jeff Bezos is going to do now that he has 35 extra minutes of free time on his hands.
Yeah, I really feel like the big story here is not that Jeff Bezos is stepping down or stepping aside. In fact, Jeff Bezos is stepping up. He's doing the cool thing that all the cool kids are doing these days and becoming executive chairman. Executive chairman means, I guess, Commodore on Star Trek. You know, essentially he gets to, hang around. He can sit in the captain's chair if he wants to. You know, he gets to talk to the aliens and make the big decisions, and then jet off back to space dock when he's gets bored with it. And this is what's happening again and again at a lot of these tech companies where you've got these charismatic founders becoming executive chairman. And actually, it really masks their or matches their persona in the company pretty well as well, because essentially, the executive chairman is the person who's going to, like I said, sit on the Senate committees, talk to the important, customers. I'm sure that he's still going to send like a few Jeff letters here and there to make sure that everybody stays in line and the corporate culture stays whole. But at the same time, he gets to do his Playboy lifestyle, which increasingly seems to be important to him. I mean, if you guys are following from the outside, there's a lot of, jetting off on yachts with models kind of things going on there. And frankly, I imagine that the Amazon people were kind of sick of that. So frankly, I'm just excited to have Andy Jassy in here. I'm also excited, let me just say that I don't work for Amazon because Andy Jassy is, by all accounts, a lot like Bezos in that he's somebody who pushes for he pushes A players to be A+ players. He's the smartest guy in the room. He's the most dedicated guy in the room. He's an idea man, but he's also, focused on executing. And one of the things too that I'm really liking about this is that apparently he's one of those people that can delegate, because Amazon has, last I checked, 5,987 different web services that they offer to customers. Oh, it's 5,959 now. Anyway, they change it constantly because they're constantly innovating. They're constantly rolling out new things. And unlike Google, they're constantly not killing them and constantly making them awesome. So essentially, we've got the guy responsible for Amazoning Amazon, and now he's sitting in the captain's chair. And I think that that's probably good news for Amazon. I think the Amazon staff are going to love this because they're all, into that corporate culture, and so is Jassy. I think Amazon shareholders ought to love this once they figure out who Andy Jassy is, which to us in the tech space has been kind of hilarious to watch them be like, wait, who? Because of course they're still like, wait, what? When they talk about AWS. But like you said, AWS is more than half the company. So I really think that this is a tremendous move for Amazon. Essentially, Amazon has their Satya Nadella or their Sundar Pichai, and they're gonna roll with this thing. And I think it's all gonna work out.
Yeah, I agree. I think this is kind of that moment when Bill Gates stepped down from Microsoft and everyone's like, oh my God, what's going to happen next? I don't think, though, that we're going to see the same situation that we had with Steve Ballmer, where things were a little bit listless for a while before they got their Satya, that Amazon is going to pick up and they're going to focus on what needs to be focused on, which is making great cloud computing things, continuing to grow that business, taking that same kind of mentality out into everything else that they're doing, and leaving the other newspaper, rocket, save the planet businesses to the side, where quite honestly they belong. I mean, we've seen this in the other tech areas when friend of the show, Larry Ellison, who happens to run a large database and cloud company, seems to be obsessed with sailboats, and that has caused a material impact to his company. And things didn't get better until he stepped aside and let Safra Catz and Mark Hurd start doing things for Oracle. So I think that this is really going to be great, because I don't think Andy has any aspirations to launch himself to Mars anytime soon.
Yeah, if I can add in there, so I don't personally know Andy Jassy, but I know people who do, and they are very impressed by the man. And certainly one of the things that I hear again and again is that no matter what your position is, if you work with him, he is dedicated to moving this thing forward. He's dedicated to pushing this thing ahead. And I think that that's good, because like you say, honestly, I feel like Jeff Bezos is too Elon Musk for the role anyway. And I'm glad to see him gone, or at least partly gone, because I feel like Amazon's going to do even more Amazon now. Another thing I'll point out, like you said, some of the folks who do know the company a little bit, I heard on the news this morning, I think it was Marketplace, they were speculating that Amazon might spin off Amazon and become AWS. No. That's not what's going to happen here. Amazon's going to become even bigger with even more fingers and even more pies. And all of it just is going to support AWS. One of the lessons from history in the tech industry is Intel. A lot of people were kind of scratching their heads over some of the businesses that Intel got in, but essentially everything Intel always did, under the classic Intel at least, we'll see what Gelsinger does with it, but everything Intel always did was basically to support the sale of more CPUs. So they got into all sorts of adjacent markets in order to support their central market, and that was incredibly smart. AWS is that for Amazon. Everything Amazon does is now going to support the growth and dominance of AWS. And also, in case you're not clear, just understand the dominance of AWS. AWS is the world's largest enterprise storage provider. AWS is the world's largest compute provider. It's the world's largest AI platform. It's the world's largest business intelligence platform. It's the world's largest basically everything in the computer industry already. And this company has another, $50 billion of market to eat before it's satiated, and it's going to do that. So I feel like this is just a tremendous move forward. Tom, let's shift gears here a little bit to talk about some other stories that we're seeing this week. What's the fastest way to steal $50 million? Well, for some executives of a regional internet registrar, Afrinic, it was IPv4 address space. A security researcher named Ron Gilmet has been tracking the fraudulent use of addresses assigned by Afrinic to some unsavory users. And after publishing his findings, managed to get an internal investigation started. Afrinic announced that a single worker had sold off the IPv4 addresses, which are pretty scarce and in demand, between $25 and $15 per address. Over 1 million of the addresses have been recovered, but there are still more out there. Tom, we've been talking about IPv4 and IPv6 and addresses. Does this create more trust issues?
Yeah, one of the problems that we have is that ISOC, the Internet Society, kind of delegates the assignment of these addresses to the 5 regional internet registrars. The problem is that the US and Asia Pac are out. Like, there are no more addresses to be found, which creates scarcity. Well, what happens when a resource gets scarce? It gets expensive. And that's one of the things that we're starting to see happening is, Microsoft is reclaiming large blocks of these address spaces that were assigned to other places, and they're offering kind of as a brokerage, which technically isn't even legal because only Aaron or LACNIC or Afrinic or any of the other RIRs can do that. In fact, they've even changed their language to say you don't own the address space anymore. You're just leasing it from us for an extended period of time so that we can reclaim it whenever we want. Afrinic seems to have gotten in on a slightly different business model. And really, so you're probably just sitting there shrugging your shoulders going, well, why should this ultimately matter? Well, one, it violates the terms of service of the RIR. You have to have a business in that region in order to use those addresses. So I can't just go buy address space in Africa unless I have a business that is either headquartered or majority owned, say in Cape Town or in Cairo somewhere. And in and of itself, that may not have been too bad. People might have been willing to look the other way. It's the fact that when Guillemette started doing all this research, he turned out that it was a bunch of fly-by-night marketing firms and a bunch of kind of unsavory characters that are using these things for other purposes. He also did some research and found out that one of the companies that I believe it's called DDoS Guard that is offering web hosting to some less than popular websites is based in, they have LACNIC address space, but they're not based in Latin America. This is going to be a problem. And considering the fact that the guy who did it basically would just grab blocks of addresses and sell them out the back door, kind of like people would sell, appliances out the back door of an appliance store illegally, it's going to be difficult to recover that address space. I heard something north of 2 million addresses were sold. And in a market today where we're scrambling and the price just keeps going up and up and up, that's problematic. So I think what's going to happen is the ISOC is going to have to put more oversight on the RIRs as this address space dwindles and we realize that these things are going to have to be preserved. Or, the other alternative is we just make everything IPv6 and the problem goes away for another 50 years. But at this point, that's trying to get blood out of a very dry turnip. So I don't know how we're going to make this work.
Yeah, I think that this is a really interesting story. And again, if you kind of are like scratching your head over this story, just understand that the dwindling supply of IPv4 addresses, the prohibition on selling IPv4 addresses, the regionalization of address management, all of these things kind of came to head in this one kind of remarkable story. So, Tom, turning again to a different news story here, we learned this week that Israeli-based networking company DriveNets has received a $208 million Series B funding round. This is a Tech Field Day presenting company, so if you want to learn more, you can check out their presentation. And they're doing big things in the service provider and hyperscale networking space by using their software to build white box switches into virtual hardware chassis. Along with the announcement comes news that AT&T is a customer of DriveNets, and this funding round pushes the valuation of the company over the $1 billion mark, making them, yay, a unicorn. Is this big news for hyperscale networking startup community, Tom?
I think it is, because the companies that are trying to basically bet on their next big winner are starting to look in this space. And that's something that has been needed for a while. I'm sure a lot of folks out there have kind of talked about maybe this little bit of a reality distortion bubble that exists around Silicon Valley, where companies are building equipment for companies that are based in Silicon Valley, but that don't work anywhere else. DriveNets is not doing that. Well, first of all, they're well outside of that bubble because they're based out of Israel, but they recognize the need for telcos like AT&T to essentially take white box hardware, things from Quanta and edge core and build them into essentially a chassis. But instead of having like all that specialized R&D to make the hardware work and building it into a half rack sized box, you can spread this across the top of rack. You can do a lot of other things with it. Essentially, it's kind of a custom spine and leaf architecture for the networking nerds out there in the audience. But you can get 768 terabits of throughput through white box switches, which should be enough to raise anybody's eyebrows. And in fact, it raised $208 million worth of eyebrows. So I think what we're going to see is that other companies besides DriveNets are going to be successful in getting, maybe if they've gone through a Series A, they're going to get a Series B, because this could be the kind of networking equipment that penetrates the hold that a lot of other large vendors have in the service provider market. It also makes a very attractive offering to larger companies doing it themselves, like Amazon, Microsoft, Google, cloud play providers that need this kind of expertise in-house to enhance their offerings, maybe not to sell to customers, but to sell the services on top of that back to customers. So I think this breaks the market wide open because, first of all, being $1 billion valuation makes you a hard target to acquire anyway. But then the question becomes, who's going to buy you first? A company to sell your stuff or a company to use your stuff to sell other things? It's a good question.
I'd also like to call attention to the fact that this is their Series B. So this is not a company that became a unicorn after a Series F or something. I mean, this is a company that basically used the A round and the angel funding to build something interesting, something useful, something that a company like AT&T would buy, and is using the Series B to step on the gas. It looks to me like they're doing it right.
Yeah, and good luck to the folks at DriveNets. And if you want to learn a little bit more about some of the cool stuff that they're working on, they will actually be presenting at our upcoming Networking Field Day event in February. Check the website techfieldday.com for more details about the lineup for that event, as well as the time to tune in to watch DriveNets present. All right, Stephen, let's shift gears and talk a little bit of fake money. Business intelligence company MicroStrategy has become the leading Bitcoin fund on NASDAQ. They have purchased over $1 billion of the digital gold, and they are seeing their stock price rise even faster than the value of the hoard of cryptocurrency that they're currently sitting on. CEO Michael Saylor is hosting a Bitcoin for Corporations event this week, encouraging others to use Bitcoin as a treasury reserve asset. Will corporations really switch from the standard of the US dollar over to Bitcoin, or is this just a kind of a pump scam for the stock? Stephen, you've been following the story really closely. What are your thoughts here?
Yeah, it's been an interesting role with them. So I first, honestly, I didn't really even know much about MicroStrategy in the core business that they provide, even though it is an enterprise software company. They sell, basically some business intelligence software, and they're moving to software as a service and cloud, and all that's great. And oh yeah, back in the summer, they decided to put all of their corporate reserve, which was about $500 million, into Bitcoin. And everybody said, wait, what? Now, it's important to note that they didn't do this quite as rapidly as some of the people are saying. They actually spent half the corporate reserve buying back their stock, and the other half they invested into Bitcoin. And then they rapidly invested more. And so basically throughout the second half of 2020, the company poured all of their excess cash into Bitcoin. That seemed to be a really, really, really good idea financially, because essentially the price of Bitcoin doubled. Their cost basis is currently, I think, about 60% of the value of the Bitcoin that they've bought. In December, January, they they actually went out and issued bonds to raise even more money, another $600 million or so, and buy even more Bitcoin with debt. And again, that was like, wait, what? So essentially, the company has bought now, as of now, by my reckoning, about $1.2 billion they've put into Bitcoin. And that hoard is worth about $2.3 billion now. And that looks like a very shrewd investment. but that's not really what they're talking about. So I was on their earnings call last week when they were talking about this, and it was pretty hilarious, just the cognitive dissonance of the thing. Because on the one hand, they're saying, and our core software products and services and blah 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 blah, and then Bitcoin, and it was like, just kind of like this weird night and day situation with them. Essentially they are a moderate sized business to business software company that just happens to be sitting on a mountain of gold. And what's happened to the stock price has reflected that. So the company's stock price has gone up and up and up, and it keeps going up. The company's value of their Bitcoin stash has gone up and up and up. Some of the news from that investor call was actually fairly interesting because, the CEO reiterated that they do not intend to sell. One of the questions was, do you intend to sell high and then get back in again lower? And he's like, no, we're going to hold. In fact, he reiterated that the company plans to buy even more Bitcoin as soon as they are able. Just keep putting it in there. And now the news is actually kind of interesting. If you go to hope.com, today and tomorrow, the company is holding a Bitcoin for Corporations event where they're essentially going to be training people at other companies how to get into this Bitcoin market. Essentially, they're trying to figure out how to have other companies join the parade. Famously, Michael Saylor tweeted at Elon Musk and said that Tesla should get in on Bitcoin. Musk later changed his profile to just the single word Bitcoin and caused a big bounce in the cryptocurrency. Clearly, he's aware of this, even though maybe he's not on board. This is a big deal. And frankly, I know we are all laughing about it. You said fake money and all this kind of stuff. Truth be told, this is not a terrible idea for a company to do. So I'm not a lawyer and I'm not going to give you business advice, but let me tell you this. The US dollar is the world's reserve currency, and the US dollar has been massively propped up essentially by the value of the US economy. Unfortunately, with the pandemic, we've been basically creating more and more and more money, which tends to devalue the currency. Obviously, China is incredibly strong. The yuan is rising. Even the euro is not as weak as people say. And I think that the whole world is kind of looking around and thinking, maybe we do need a global reserve currency that's not called the US dollar. And, frankly, as much as I hate to admit it, Michael Saylor has a credible point that Bitcoin makes sense as a global reserve currency. One of the craziest things about it is that you cannot do any of the currency manipulations that happen in real, useful currency with Bitcoin. It just isn't mathematically possible. So I don't think this is a terrible idea. And certainly it was a very good idea for MicroStrategy, at least until today. I think the big problem is that Bitcoin does fluctuate quite a lot against other global currencies, going up and down. And this could cause tremendous problems for a company like MicroStrategy, which has essentially transformed itself into a Bitcoin mutual fund, essentially. Basically people are buying in, obviously for the Bitcoin, not for the business intelligence software and services. And it's a big risk for the company, and it's a big risk for any company that did this. So speaking as a CEO of a company, I registered for MicroStrategy's event. I'm going to watch his videos and see what he has to say, but I'm not planning on putting our reserve currency into Bitcoin yet.
Yeah, I've been the kind of person who's a little bit kind of pessimistic when it comes to Bitcoin, just because I'm also the same way when it comes to stocks. When people are like, "Oh yeah, I made 8,000% on that stock going up," I'm like, "No, you didn't. You on paper you're richer, but until you have dollar bills in your hand, you don't have money. You have the appearance of money." And I think maybe that's the thing that's always unsettled me about Bitcoin. But it could also be the fact that I had a project years ago, like, oh, maybe I should start a miner, and then my ADHD self didn't, and now I just kick myself every day that I didn't do that. But yeah, I mean, of all the bets that you could make, this isn't the worst. But in a world where we don't know what the best bet could be, I mean, it couldn't hurt to try. And if everything falls apart, then oh well, you did your best.
Yep. Yeah, and I honestly, so far it's looking pretty good. One more thing that's kind of going in Saylor's favor is that many of the big global banks and insurance companies have been diving into Bitcoin in a big way, and there is a limited supply. As of now, the last couple of months, these big global investors are buying way more than the mining output. And that's one way of measuring sort of, whether the market is tightening or loosening is, because there's a certain amount of Bitcoin that gets mined every month. And right now, you've got, a big fund like Grayscale buying up 3 or 4 times as much Bitcoin as is created on a daily, weekly, monthly basis. That's bound to make the price go up. Also, with this tremendous amount of investor money and Wall Street money sitting in Bitcoin on the blockchain now, you can also look at it as, maybe these guys aren't going to let it fall. If they can probably keep it up as long as they want to keep it up, we may end up seeing this stupid, crazy, fake money idea actually work. And I'll point out one more thing. Michael Saylor is the only person I know to have majored in science and technology studies as an undergrad, except for yours truly. That's my major. I thought I was the only one at WPI. He majored in that at MIT just before me. So, hey, buddy, got that in common. Tom, no doubt you've heard of Emote, the Egyptian pharaoh that Brendan Fraser is going. Oh, no, that's a different thing. No, Emote is the menacing ransomware collective that's been extorting users for the past 5 years by stealing their data and ransoming it back to them now that it has escaped from the mummy case. It's a particularly nasty strain that constantly evolves and develops to evade countermeasures. Last week, it couldn't evade them all, and a global corporation or coalition of police forces moved in on the creators of the malware in Operation Ladybird, sweeping up the command and control functions and arresting 2 of the leaders of the gang in Ukraine. The group was responsible for causing upwards of $2.5 billion of damages, and during their arrest, social media videos showed off cash and gold bars being seized during the raid. Tom, is the future of malware prevention going to include police? What's going on here?
Well, Emotet is like that, the darker, uglier Sith Lord in the background that nobody ever sees, while things like WannaCry and other more flashy Darth Maul-ish Sith Lords are the ones out there causing all the damage to companies that you've seen. The problem with Emotet is it's very much based on a framework. So you'll download the framework, you'll make the targeted malware, it'll work. They'll get telemetry back from it, it'll get caught, and they'll figure out how it got caught, and then they'll patch it, and then that goes into the next revision. So essentially, it's like building your better malware with every release. And because it was based somewhere outside of the US, it was difficult to nail down. Well, it turns out that they finally got enough people torqued off at them so that they sent the police after them. And mind you, this was a globally coordinated raid: US, Canada, Netherlands, Ukraine, Germany, all over the place, because they knew they were going to have to take down as many of the CNC servers as they could as quickly as possible to get rid of it as best they could. And they still only managed to arrest 2 of the people who were really heavily involved in this. And this follows a lot of other news that we've been seeing where like US Cyber Command is taking down TrickBot. There are some other malware creators that are being targeted actively by law enforcement. And it goes back to a podcast that we recorded late last year on the Gestalt IT on-premise IT roundtable. Are we going to have to see police and governments getting involved in malware disruption in order to really make it stick? Because one of the problems that we're seeing is that there are some nation states that are kind of friendly to this kind of activity. And what they're basically saying is, oh, you guys got caught. Oh, slap on the wrist. Don't do that again in this place. But if you move across the street, you can restart and do whatever you want to do. Ultimately, that's not going to work. So what we're going to have to see is, large, massive coordination from Interpol and these kinds of things. But the Emotet thing is a really good sign that that's what we're going to start getting. Now, the question is, are we just going to drive these people back underground so that they're, kind of in the shadows and doing things, and then they'll pop out for a little bit and then go back? Because right now it really does kind of feel like they're sitting inside of a, well-protected castle and screaming that our fathers smelled of elderberries, and because they can't be touched at this point. And we have to stop that kind of behavior, because quite honestly, when they're underground, they're easier to deal with because they're not recruiting adherents, they're not making big news and getting their name thrown around, and it is a lot harder to get funded that way. But take it for what it's worth. You take one down, and this could be the Hydra where we strike off a head and two more grow in its place. But I think that we've struck off enough heads at this point that the solution is a lot closer to being a solved problem than it is just creating more mess.
It's an interesting conundrum, isn't it? And it kind of goes to the current discussion about deplatforming on social media for people who have, socially incompatible views. Essentially, on the one hand, you look at it and you say, okay, if we drive these people underground, then they are basically freer to do their thing than they were when they were above ground. If they are completely, if these become completely hidden, completely out of reach of the law, completely out of sight, does that mean that they're even more able to do what they do? On the other hand, I think that there's been a lot of sociological research that shows that actually deplatforming and driving things underground actually does help. And it's been interesting to me. This is something that I was looking at with relating to the social media stories and deplatforming, but I see a strong parallel here. Essentially, by squashing the public obvious persona of things like this, you actually can help to tamp down the activity generally. It does deprive them of some of the public, recruitment that they might have. It also deprives them from the ability to use a lot of public resources, and frankly, that might actually help. So, I'm a law and order guy, I guess. I'm saying maybe it is a good idea to squash them down, even though of course they're going to go encrypted and they're going to use Monero and whatever to send money around instead of gold bars on social media. But I think it's going to help. I really do.
Yeah, I think at this point, it's like using math problems to defeat spammers or CAPTCHA. Anything that we can do to increase the difficulty of them being able to do their operations is a win, because it makes crime pay a little less. And with that happy, fun message, we're going to go ahead and draw this episode of the Gestalt IT Rundown to a close. Thank you very much for joining us. We always appreciate you tuning in and leaving comments and liking and subscribing. We have an episode that comes out every Wednesday at 12:30 Eastern time. We have a lot of things coming up. Stephen, I know that you're a super busy person. What are some of the things you got on your plate that people can tune in to check out?
Well, right now, we just finished Storage Field Day last week, so there's a bunch of videos on YouTube. If you go to YouTube/Tech Field Day, you can find those. I'm also very, very proud of the work that we've been doing here on the Rundown, but also on the Gestalt IT Roundtable podcast and the Utilizing AI podcast. So if you check, just Google Utilizing AI podcast, you'll find episodes of that every week on Tuesdays. And if you Google or look at the Gestalt IT website, you can find more about the on-premise, which I promise I'm using correctly, on-premise IT Roundtable podcast. I think that's probably the best thing that I'd like people to look at.
Yeah, as a matter of fact, if you head over to the website, gestaltit.com/podcast, you'll find our latest episode, which is that Pat Gelsinger will save Intel. And if you were watching live whenever we found the news that Pat Gelsinger would be taking over the reins and Steven's shocked emoji face, you're going to want to tune in to see his thoughts about how that whole transition is going to go. You can find this episode along with all of our other episodes on our YouTube channel at youtube.com/gestaltit video, where you're likely watching it now. If you're watching it on YouTube, make sure you check out the website. If you're watching it on the website, go to YouTube and check out some of the other things that we do there. You can also tune in on podcasts. We have podcast feeds. So if you want to listen to this while you're mowing the yard or on your daily commute, you're more than welcome to do that. We appreciate you guys leaving a review and a rating. That helps other people find us and spread the love of people making fun of the news every week. Well, that'll do it for us. We're going to go ahead and sign off and probably go buy a whole bunch of Bitcoin from Amazon so that Andy Jassy can keep his job another year. But for Tom Hollingsworth and Stephen Foskett and the rest of the Gestalt IT crew, thank you very much for tuning in, and we will see you all next week, and have a super sparkly day.